Hi everyone, welcome back to the channel. My name is Zari and you guys are watching Finance Career. In today's video, we're going to be looking at 5 unique gems that are coming up from Polkadot ecosystem. The purpose of this video is to give you another opportunity for you guys to invest in different project. The goal of this video is for you guys to look at investing a very small amount of money. Now, as you guys know, we are very cheap. We are very afraid to put all in. That is the goal of this video, is to put a small amount of money. We're talking about $10, $50, even $100, and to look at least 10 times return with the hope of reaching 100 times return. So stay tuned. Now, I would like to also to highlight that this is something that you know, that Polkadot ecosystem has 77 different projects are built on top of it. Now, some of those projects are migrated or appearing on multiple blockchains. For example, let's look at Ontology. Also, they have their own blockchain. I think they also appear on Neo blockchain, for example. So there's some of them that might appear on multiple blockchains. So just for you guys to know. So out of the 77 different projects, I chose for you guys 5. So I tried to choose 5 different projects in different sector, and it also have an attractive market cap. So we're gonna start first by this project called Bepro Network. So Bepro Network has currently a price of $0.01 and a market cap of $35 million. So before we're even gonna dive in, let's look first at the all-time high and all-time low. So the all-time high took place 13 days ago, where it actually is 57% higher than the current price of today, and all-time low was 3 months ago, and since then it generated 5,742%. Now, if you somehow manage to participate in their initial coin offering, or whenever they raise money, then you generated 883%. Saying that, participating in initial coin offering or any other similar process of helping company raise money might not be that profitable. In some cases, not always. So now that we have this out of the way, so let's look at what this project do. So this project, based on the website, literally written, build the future of DeFi gaming. So they have currently 10 different public products and 50 projects are using it. Alright, so apparently it's been trusted by different companies and blockchain. You have Chainlink, Ankar, DoubleSpin, and many other ones. And then you have obviously Coinmarketcap. So what this platform does is basically it enables it's in an easy way to launch different projects or different gaming solution. So from what I can see, if you look here, scroll down. So if you look here on this section, you can see that basically they're targeting prediction markets. So basically, I will say more about gambling market. You have then betting, and then you have the DeFi gaming and more. So this is basically the current industry they're actually trying to target. So obviously, if we're gonna have maybe another big trend of gaming on NFT, this might be the platform that will obviously benefit from it. So this is something for you guys to consider. All right, so the website does look quite nice, and for you guys to understand, in order for you guys to operate, you need 1 million of this token. So if you want to actually use the infrastructure, you need to stake or lock 1 million of this token, which is based on the current value. It's $19,000. Okay, this is basically for you guys to understand. If you're going to be earning like additional incentive, you can obviously stake 25 million, which will make you part of the console, and basically you're going to get much more voting rights and much more incentive. So this is to do with, I would say, they are targeting more gaming, which is one of the projects I thought can do potentially very good. And again, I want to remind you guys, this market has a $35 million. So if this project will still be good for next year or two, we can easily see $350 million market cap, even $1 billion market cap, which means based on today's price, we can look at 10 to 30 times return. Now again, it's only speculation. We might be wrong, so the goal for you guys to put $100 or even maybe $50. Anything is significant for you guys that you won't be losing your pants over it. So this will be my approach. And the next one actually I want you guys to look into is it's a project called Kylin, or KYL. They have a market cap of $78 million. The current price is $1.16. So let's look a bit more about the history and of the prices of this project. So all-time low was 21 days ago, and since then the price went up by 60%. And basically the all-time high was $2.2, which since then we have like almost 50% drop of the value of this token. So again, it's a bit risky. This is why we're looking at investing a small amount of money. You don't know if you're going to go further lower, so be cautious. Alright, so this is the price variation that this project has. Alright, so the reason why I like this project is because I really think that this project is trying to compete with another interesting platform. So if you see here, building a cross-chain platform powering the data coming on Polkadot. So from what I'm understanding here, they're trying to maybe provide something similar to what Chainlink is offering. Chainlink is obviously targeting mostly DeFi, mostly Ethereum-based project, but I think they're trying to compete with Chainlink by offering data analytic, data oracle, token, kylin token, obviously data marketplace. So I think this can be something that potentially, if you just focus on the oracle aspect, might be able to reach the same level of Chainlink. Now, for those who remember, Chainlink is trading, I think, now at over $10 billion. Let me just double check that just to be sure. It's $11 billion. This is the current price market cap of Chainlink. And if you go back here, so this is the current potential. Now, Kylin has a current market cap of $78 million. Now, if I'm being honest, maybe here I'm looking at 10 times return, unless Kylin will be able to really dominate the whole oracle aspect of every Polkadot project, and Polkadot become a very dominant blockchain that people will be using in the future. If this is the case, Kylin would definitely benefit from it. We can easily look at least 10 times return. This is my forecast potentially for this project. Now the third one we're going to look into is called ALEPH.IM. So the token name is called ALEPH. So basically it has a market cap of $31 million. And let's talk a little bit about the history. So from what I can see here, the all-time high was 7 months ago, and right now we're trading once again at 45% lower from the all-time high. Since they went public, it generated 423%, or since the all-time low, it generated 635%. Now, remember, they have 31 market cap. This is the project size. Now, let's go over the website. So this is something that I think might be quite interesting. So what they're trying to do, they're trying to create a cloud computing for DeFi and Web3 interface. So basically, they want to allow a blockchain-enabled app to securely access trusted off-chain data or computation with a couple of lines of code. So basically, I would say similar to what Chainlink is trying to achieve, but maybe just in a different format. So they're trying to provide for DeFi project and also for other non-related blockchain-related project. And obviously, the whole concept of it is to obviously to be able to be compatible with different blockchains. In this case, they're compatible with Ethereum, Polkadot, Cosmos, Binance Smart Chain, Solana, and Avalanche. So this is basically what are they working on. So then you have a little bit more information about what is the current situation and what is next. So they have the DID framework, so it seemed to be more for KYC, it seemed like it. And you obviously have virtual machine. From what I can see, the use case is DEX, order book, document certification, KYC, metadata, NFT metadata, documentation management system, cloud storage, a real-time dApp. So this is basically what industry they're focusing on. So I guess maybe when you will be a requirement for decentralized DeFi platform, decentralized exchanges, maybe they might consider using ALEPH solution for better securing documentation and KYC information, or even securing NFT related instrument or item. So this is basically something for you guys to consider. Again, in my work, I'm being quite conservative with this project. I'm saying 10 times return. You have another project trying to do the same thing, what's called Civic. So let's look at Civic, for example. Civic has been around for, I think, 3 years or 4 years, if not more. And Civic has a current market cap of $322 million. Back in January, it reached that $1.2 billion market cap, and then it obviously plummeted dramatically, but now we are looking at $320 million market cap. So if you go back to the market cap, so I'm saying here that if I'm being conservative, ALEPH might potentially do a 10 times return from the current market cap. So again, it's not 100 times return by all means, it's a 10 time return. Again, it might also get to zero. It might get delisted, you never know when it comes to cryptocurrency. Now the fourth project I actually want to cover is something called Router Protocol, or the token name is called Root. So Router Protocol has a market cap of $7 million, and current price is $4.14. And if you look here, the all-time high was at 5.27, and the all-time low almost below $1. Since then, we have a 317% gain. All right, so let's see what this project do. So this project basically create a cross-chain governance or a solution for multiple blockchain. So from what you can see, you have Medic, you have Binance, you have Avalanche, I think, and you have here Ethereum, and then you have all this obviously decentralized exchanges like Uniswap. So I guess they're trying to compete or to provide another solution for multiple blockchain. So basically they're trying to create unified gas fees, cross-chain governance, best price discovery, and unified aggregator. So basically it's probably targeting more DeFi exchanges, or maybe a platform that needs to aggregate their pricing for multiple platforms, and also to provide the customer the best pricing or the best execution. So this is basically what they're trying to do. So again, this is something that might work. Again, we're looking at throwing very small amount of money, $10, $50, maximum $100. Now, one of the last projects I actually want to cover is a project called Insure DeFi. I like this project because I think it's one of the unique projects that I've seen in a while. And he has a current market cap of $100 million. And it seems to be quite stable, the prices. So let's see here. So the all-time high was a year ago, which since then dropped by 93%. Again, the price from the all-time high is 93% lower. This is insane, guys. This is insane. It's also a bit frightening. This is why we're talking about $10, $50, $100 maximum. Because if you were to put a year ago $10,000, $100,000, you're gonna be shitting your pants by now. So please be cautious when you come to this sort of project. The all-time low was 3 months ago, and since then it generated 1,300%. And if you have invested in their, I don't know, initial coin offering, whatever they did to raise money, you only made 183%. So this is something for you guys to really take that into consideration and when you look at those prices. Now, what this project does is actually something very unique. It's insure your crypto portfolio. So by you buying this token, obviously you have to buy your token based on the value of your portfolio. Let's say you have $10 million worth of cryptocurrency, and you want to insure the value that if, for example, the value were to go below the $10 million valuation, you're going to be compensated by Insure. And obviously, the more money you have, or the more value your portfolio is worth, obviously the more token you need to insure. So this is basically the concept. But it's a very nice concept that, again, how do you actually maintain this pricing? If right now all the projects go down by 90%, how are you able to basically pay off everyone? So again, this is something for you guys to understand. So here you have different packages. We have someone that you can insure up to $140,000. So basically it's written here, they cover you from scammer, from 100% devaluation, or from stolen fund. That's basically the concept. You obviously have the option to insure your NFT and different crypto portfolio, dynamic premium pricing, fast transaction, Chainlink integrate and secure and reliable. So this is basically something that you should probably consider. Again, I think it's really interesting, and I would like to understand how they can actually secure funds. If ever now crypto portfolio go down to 90%, and how can you actually pay up? How can you actually pay everyone up? So this is something I would like to understand. So again, this is probably something that is very risky. I think whenever the market go down, this token will obviously go down, because they obviously have to pay up everyone. And if the crypto portfolio is going up for everyone, I think they're gonna get probably more people who will be interested to buy this token. So again, it's not licensed, it's someone that came out with a nice idea, but in theory, I'm not so certain how it can actually last. Okay, this is something for you guys to try to understand. All right, so basically this is the packages. You can see here more. I think if they were regulated, or if this project came from an insurance background, for let's say for insurance cars or plane or life insurance, then obviously this will make sense, because I know they know how to manage the risk to be able to pay everyone up front if something were to happen. Now, the difference between life insurance or car insurance, or taking a plane and having an accident, is that it doesn't happen to everyone. Now, everyone they can insure a cryptocurrency, they're only insuring it because they are holding cryptocurrency. Meaning, if the market go up, great, they don't have to pay up. If the market go down, it's affect every single customer. So this is something that is not very good. And if you look at the cycle, usually it happens every 3 to 4 years. There's a very big cycle. So I think in the first 3 years, they don't have to pay everyone anything, and then you have once in 4 years they have to pay everyone up. So I'm not sure how they're able to do it. So this is my 5 different projects that I think have an interesting perspective in the long run. Again, we just are taking a risk, we're taking a gamble. I want to share with you guys. You're more than welcome to do more research, and that's it. Until next time, bye bye.